Have you ever looked at your investment portfolio and feel like it's trying too hard? Like it's this overcomplicated mess of random ETFs, mutual funds, and maybe even a few meme stocks you'd rather not talk about? You're not alone. Most people think that building wealth means owning a little bit of everything, but here's the truth. What if the smartest portfolio in 2025 doesn't have 20 moving parts? It has just three? I'm Mike, and this is Golden Goals. And today I'm going to show you a portfolio so clean, so focused, and so powerful. It could realistically turn a daily $10 habit into over $1 million in 30 years. Sounds insane? Stick around because by the end of this video, you'll not only see how that's possible, you'll understand exactly why this strategy works and how to make it yours. This isn't one of those get-rich-quick clickbait ideas. It's grounded in real math, real market data, and it's tailored for real people, especially if you're in your 20s, 30s, or even 40s and trying to figure out how to build serious wealth without burning yourself out or losing sleep over every market dip. And trust me, once you see how this 3 ETF system works, you'll never look at investing the same way again. The problem: why most portfolios fail. Let me hit you with a stat that's going to stick in your mind. The average retirement savings for American families is just over $334,000 total, after decades of working, saving, and doing the right thing. Now, maybe that sounds like a decent chunk of money, until you realize that's meant to last 20 or 30 years of life without a paycheck. So, where's the disconnect? Here's the hard truth. Most people's portfolios are too messy, too scattered, or built on outdated advice. They're stuffed with random ETFs, underperforming mutual funds, or half-baked stock picks they heard about from their cousin at Thanksgiving. There's no clarity, no direction, just noise. And because there's no strategy, people end up jumping in and out of the market, chasing trends, or freezing entirely when things get rough. That's not investing, that's gambling with nicer vocabulary. We're not doing that. We're building something better, something bulletproof. The 3 rules wealth strategy. Now, before we get into the actual ETFs, you need to know the 3 simple rules that make this strategy so powerful. Rule number 1: 1 ETF per category. No more clutter. You only need 1 ETF to anchor your portfolio, 1 to accelerate your growth, and 1 to pay you while you wait. That's it. Pick 1 solid fund per role and let it do its job. Don't overcomplicate it. Rule number 2: know your goal. Are you 28 and trying to retire by 50? Or 42 and aiming for financial freedom by 60? Your mix might shift depending on your age, income goals, and how comfortable you are with risk. There's no one-size-fits-all answer, but there is a system you can tailor. Rule number 3: be consistent. This is the big one. It's not about timing the market or jumping from one hot fund to the next. It's about staying in, reinvesting your dividends, and letting compound interest work like a snowball down a mountain. The longer you stick with it, the bigger that snowball gets. These rules are simple, but they're powerful. And now that you know them, let's start building your 3-part wealth machine. Number 1 ETF, the foundation. Anchor your future. Every portfolio needs a rock, something that holds strong no matter what the headlines are screaming. That's where your foundational ETF comes in. For this strategy, we're going with the Invesco S&P 500 GRP ETF. Think of it like a filter for the best companies in the US, but smarter. Instead of just tracking the S&P 500, this fund focuses on the companies that are growing fast and still reasonably priced. It's not about chasing hype or betting on the next Tesla. It's about owning high-quality businesses. Think Microsoft, Apple, healthcare giants, industrial leaders that are built to last. Here's the kicker. Over the past 10 years, this ETF has grown at an average of 11.28% per year. That's steady, sustainable wealth. And when you reinvest those dividends, that's where the real magic happens. Even with a modest 1.55% yield, the compounding effect over time is massive. Let me paint a picture. If you invested $10,000 into this ETF today and reinvested every dividend, in 30 years, you're looking at nearly $370,000 and close to $5,000 a year in dividends alone. That's what I call smart growth. Not flashy, not risky, just pure, dependable progress. And it's only the first layer. Up next, we're putting the pedal down and looking at the ETF that turns your portfolio from a strong base into a wealth-building machine. 2 ETF, the accelerator. Compound like a boss. All right, now that we've got your foundation locked in, it's time to bring some heat into the portfolio. This next ETF, it's not here to play it safe. It's here to grow your money fast. Meet the Invesco QQQ Trust, also known by its ticker, QQQ. This beast tracks the NASDAQ 100, which means you're getting the 100 largest non-financial companies on the NASDAQ. Tech titans, innovation giants, and future-shaping businesses that are rewriting how the world works. I'm talking about Apple, Microsoft, Nvidia, Amazon, Adobe, and more. These aren't just companies, they're ecosystems. QQQ is like strapping a turbocharger onto your portfolio. Yes, it's a little more volatile, but the reward speaks for itself. Over the past 10 years, this ETF has averaged a return of 16.36% per year. Let that sink in. Let's put it into real numbers. $10,000 invested in QQQ today, held for 30 years with reinvested dividends, could grow into a jaw-dropping $1.13 million. That's not a typo. One ETF, one decision, over $1 million in wealth. But here's what I love most. QQQ isn't about gambling on the next crypto or penny stock. It's about owning the innovation that's already changing the world and riding that wave long term. If your foundational ETF is the strong, reliable sedan, QQQ is your Ferrari. It moves fast, and when given time, it flies. But speed alone won't get us to the finish line. That brings us to ETF number 3, the one that makes sure you get paid while your money works. 3 ETF, the income engine. Get paid while you wait. You've got your base. You've got your accelerator. Now it's time to add a layer that gives you cash flow, stability, and peace of mind. We're skipping bonds. Why? Because in today's economy, bonds are like driving with the parking brake on. Low returns, high risk when rates shift, and not much growth. Instead, we're turning to one of the best-kept secrets in dividend investing, SCHD, the Schwab U.S. Dividend Equity ETF. SCHD isn't about chasing high yields from unstable companies. It's about owning rock-solid businesses with strong balance sheets, proven earnings, and a track record of consistent dividend growth. We're talking about names in consumer staples, healthcare, financials, sectors that don't crash when tech takes a breather. The numbers. SCHD pays a 3.99% dividend yield, with annual dividend growth around 11.3%, and its average 7% returns per year over the last decade. Invest $10,000 and reinvest every dividend for 30 years, and you're looking at over $630,000, with monthly dividend income of nearly $5,900. That's not just growth, that's freedom. This ETF is like the wise old investor in the room, calm, consistent, and quietly powerful. And when markets go sideways or your QQQ roller coaster gets wild, SCHD is the reason you don't panic. It pays you to stay patient. All right, here's where the magic really happens. You've seen each piece of the puzzle. Now let's put them together into a strategy that's clean, simple, and wildly effective. It goes like this. 1/3 into GRP, your steady foundation. 1/3 into QQQ, your growth engine. 1/3 into SCHD, your income powerhouse. Let's say you drop $10,000 into each ETF today and reinvest every dividend. After 30 years, that combined portfolio is projected to grow to over $436,000, with more than $6,500 a year in dividend income. But what if you don't have $30,000 lying around? No problem. In the next section, I'll show you how just $10 a day, less than a cheap lunch, can grow into over $1 million with this exact strategy. And that's where things get really exciting. Real results. The power of $10 a day. Let's kill the myth that you need to be rich to start investing. Because here's the reality. Just $10 a day can completely change your financial future. Think about it. That's your daily coffee, or a random snack you don't even remember eating. But invested into the 3 ETF portfolio we just built, it becomes a wealth-building machine. Here's what that looks like. You invest $10 a day consistently into this portfolio. That's about $3,650 a year. Fast forward 10 years, you're sitting on roughly $68,000. 20 years, around $310,000. And by year 30, you're crossing $1.15 million. That's not clickbait. That's compound interest in action. That's what happens when you commit and let time work its magic. Even better, by year 30, you're earning around $1,431 every month in passive dividend income. That's money showing up while you sleep. That's freedom from paycheck to paycheck stress. And all of it starts with $10 in a decision. How to adjust based on your age plus goals. Now, you might be wondering, Mike, should I follow this strategy exactly as it is? I'm not 25 anymore. That's a great question. Because while the strategy is powerful, you should tweak it to fit your timeline and lifestyle. Here's how I'd break it down. If you're in your 20s or early 30s, time is on your side. You can afford to lean heavier on QQQ for that explosive growth. Maybe 40 to 50% growth, 30% foundational, and 20% SCHD. If you're in your 40s, you're probably balancing growth with stability. Stick to the 33-33-33 model, or slightly tilt toward SCHD for more income security. In your 50s, you're getting closer to drawdown years. You want that steady income to take the lead. Shift more weight into SCHD, keep QQQ smaller, and let GRP provide the backbone. Mindset shift: wealth isn't luck, it's a system. Here's something I need you to hear loud and clear. Wealth isn't about luck. It's about systems, habits, and time. You don't need to be a financial genius. You don't need insider knowledge or a perfect market entry. You need clarity, consistency, and belief in long-term results. The truth is, most people lose the game because they try to win it fast. But the ones who win, they stay patient. They stay invested. They automate. They reinvest dividends. And over time, their money works harder than they ever could. This strategy isn't flashy, but it works. It's built on logic, on data, on decades of proof. And best of all, it's built for people like you. The only question now is, will you start? If this video opened your eyes, don't let it stop here. First, hit that subscribe button so you never miss a breakdown like this. Drop a comment and let me know. Which of these 3 ETFs fits your style best? You don't need more noise. You need a plan that works. This is Golden Goals. I'm Mike. And your financial future just got a lot clearer.